Hello everyone. Do you know how audit was done under the Customs Act prior to 2011 and post 2011? If you want to know more, stay tuned. My name is Viren Dayal. I'm a custom broker and a LSC certified trainer in customs law, applied rules and regulations. And the topic today I have chosen is on audit.
For latest updates, subscribe to our channel and press the bell icon.
As you are aware, collection of duty is a constitutional provision, and when a bill of entry is filed by an importer, the custom officer's duty is to check the assessment whether the duty has been correctly classified and calculated. So prior to 2011, there was a concept of concurrent audit under the Customs Act. This was an old age phenomenon in India. So what was concurrent audit? The process was like this. An importer files a bill of entry which is assessed to duty by the assessing officer known as AO. And the burden of classification, whether right or no, whether correct or incorrect, was on the customs officer. Once the bill of entry is assessed, it was concurrently audited, that is simultaneously audited by an auditor known as appraising auditor. And from the appraising auditor's table, it went to the AC audit. So there are three assessments done simultaneously. One, assessed to duty by the appraising officer, then the calculations rechecked and the assessment checked by the appraiser. AC of that particular chapter or that particular group, what is popularly known as in customs, finally put his signature on the bill of entry, and then the rest of the work was done, such as paying the bill of entry and taking the delivery upon examination. So basically there were 5 stages to check whether or not the duty is correctly taken. Stage 1 was appraising officer passing the bill of entry upon assessment. 2, appraiser audit. 3, AC audit. 4, group AC. 5th, during examination. So this particular procedure, concurrent audit, was prevalent in India since a very, very long time, since ages. But the government's first reforms of trade facilitation was in April 2011, when the concept of self-assessment was introduced in the Customs Act. Hence, the importer had to self-assess the duty to the goods, and now the onus of classification, description, etc. shifted from the custom officer to the importer who makes the assessment. So all of us after 2011 till date are self-assessing the duty on the goods, and therefore from concurrent audit, the concept of post clearance audit PCA was introduced in the Customs Act. In 2018, the government further formalized the process of audit under chapter 12A of the audit, and accordingly premises based audit concept emerged, and the government in 2018, to give effect to premises based audit, introduced Customs Audit Regulations 2018. Hence, there was a sea change in the concept of audit from concurrent up to 2011 April to now post clearance audit. So the government introduced RMS, the risk management system module in the Indian customs, allowing the importer to self-assess the goods, because most of the importers work scrupulously and they follow the law very regularly and pay the right amount of duty. This was the concept now introduced after 2011, known as premises based audit, where the proper officer can write to an importer, again based on RMS and the risk of that particular importer or the risk of the goods, that they wish to conduct premises based audit, and in a time bound manner as per the regulations, that is the custom audit regulations, would write a letter to the importer asking to keep the data required for audit in a sequential manner, and it was the duty of the importer to keep the data ready for the purpose of the audit. So what is audit here? Audit, besides the books of account, can be audit of the declaration, checking the goods at the site, drawing samples at the site, checking the bill of entry, the invoice, the packing list, checking the import license or any authorization or script which has been covered under the particular import. And the scope of audit was quite vast, And the auditee here, besides the importer and the exporter, will be anyone who directly or indirectly is concerned in carrying, clearing, and forwarding any import goods or export goods, including a transporter, a warehouse keeper, a CFS, and so on. The regulations were made also to include a penal provision of penalty in case any auditee did not adhere to the request and did not keep the documents ready or did not cooperate with the department in carrying out the audit. And the penal provision here was a penalty of rupees 50,000 on each auditee who did not participate correctly in the audit or did not follow the instructions. It was mandatory for the auditee to show all the documents required, and it was up to the custom department to also engage professionals like chart accountants, cost accountants, or any expert in the field of software and hardware, computer systems, to check all the documents and the data of the auditee's premises. Hence, this has been the scope of the audit under the Customs Act 1962, particularly after 2018.
For detailed learning of all logistics subjects, visit www.logiveda.com.